Hello there, and welcome once more to, it's the Open Door Show from Property CEO. My name's Ritchie Clapson. If you didn't know by now, maybe you're new to this channel. If you are new, like and subscribe us because then you'll get notifications when new ones come out. It's great to have you here today. And over the next 30 minutes, as always, we're going to take a deep dive into the world of small-scale property development. We're going to be talking to movers and shakers. In fact, I've got a great guest on here today. This is going to be really interesting for you, particularly if you're out there thinking about pulling finance together for your developments and you want maybe creative new ways of pulling finance together. I've got a great guest who's going to give us some really good information. So make sure, get your pens and paper ready for this. I'm sure there's going to be some stuff you want to write down. So we're going to get that inside track, as always, on property, what you can do, how you can raise the money, how you can find deals. Above all, we're going to have a bit of fun, because life is too short not to. So who is today's guest? You don't want me rabbiting on. You want to know who it is. You want me to bring him on. Well, it's a great friend of mine. We met at some exhibitions. We sat on some panels together, and I really like this guy. This guy is Ashish Saraff, and he runs a company called Novi. Okay, I'm not going to tell you too much about it because I want Ashish himself to introduce Novi and tell you what it's about. But I think this is going to be really interesting. Let's hope he's here. Let's hope he's ready to join us. Ashish, are you Are you there? Are you available?
Hi, Richie.
Hello. How are you? You well?
I'm very well. And you?
Yeah, very good, my friend. Look, nice to see you again. And thank you kindly for coming on here to Open Door to talk to our guests here who are going to be listening whenever they're listening. Could be in the day, could be in the evening, could be abroad, whoever. Actually, we met obviously at one of the property exhibitions. We sat on a panel together. That was exciting, wasn't it?
We did. I think it was the Landlord Investor Show, if I'm not mistaken.
You are, absolutely. Look at that. What a great memory. National Landlord Investor Show we were at, and we were talking all about what's coming up in property and creative financing and all sorts of things. And there was a few of us on there, and I think that worked really well that day. I quite enjoyed that, didn't you?
We did. It was about alternative investments in property,
Mm.
and it was a great chat from across the spectrum.
Yeah, no, it was good. And do you remember one of the other guests, Kane? I saw Kane. He was the rock star guy. I can't remember what he called his business now. Forgive me. But I met him actually at an exhibition last week, so it was good to catch up with him again. He actually had this exhibition stand, and he was the biggest TV I've ever seen in my entire life. It was about 100 inches. It's a huge thing that he was displaying some stuff on. Anyway, that's got nothing to do with today. Actually, we're going to talk about Novi. We're going to talk about this business that you've got there, which you and I have obviously had a chat previous about this. I like it. I'm really interested to see what it's about and tell people what it's about. So, what's going on there at Novi? What do you do? Give me a quick outline first of all what the business is about.
Well, firstly, thanks for having me on this show, Richie. Novi is an innovative property platform. We started as an investment management platform, offering fractional ownership for smaller investors to get into buy-to-let. And we then moved on to foreign national loans. And that's an area which was very interesting because it was a gap in the market. A lot of foreigners wanted to buy properties in the UK, and traditional lenders would not lend to them. So we started that product. And now we are working on something very exciting, which is structuring mezz finance for small developers who I believe can help alleviate the shortfall of housing in the country.
Yeah, no, you're absolutely right there. I mean, that is, well, as you well know, that's part of my passion. I retired 13 years ago, and I always tell people I have two visions, two passions. One is to help people that want to go and earn six-figure sums in a business model, which property development can give you. But the bigger passion and the vision over that is to do my bit to help solve the housing crisis. And we fall hundreds of thousands short on what we're supposed to do. And small-scale developers are going to be great people to help that. So this product, when we talk about mezzanine finance, there'll be a lot of people who probably don't understand that term. Could you talk about what these layers of finance are to start with, perhaps?
As the name suggests, mezzanine sits between two floors. So in old constructions, you would have a ground floor, a mezzanine, and then a first floor. Similarly, in a capital stack, in a balance sheet, you would typically have equity and debt. So if your project was worth £100, you would put up £30 of your own, which was equity, and £70 would be lent by a bank, which would be a first charge debt. Now, mezz sits between equity and debt. It basically helps you reduce your equity commitment in exchange for an additional share of the profit to the investor. So that's where we are trying to develop a product in consultation with small developers to see how and where we can help them.
So this stack of mezzanine, we could still potentially get our senior debt coming in at 70%. Could this mezzanine help with this 30%, the £30 in your £100 example? So as developers, we don't have to put the whole 30% in. Is that where it sits to help in that section?
You're absolutely right. So we can help you reduce that £30 burden into say 15 or £10 and come in with that extra money in between. And it would definitely help small developers get started, or even those who are already in the business, they could do maybe two instead of one project at a time.
Yeah. So what we're saying there, I mean, it's funny we're using a £30 and £100. I mean, I know what we're going to buy for that, but it's a great number to obviously get our heads around. But yeah, what we're saying, if we actually had £30, so if you're out there listening to this and you had your £30 or your 30,000 or your 300,000 to invest, what we're saying here, what Ashish is saying is, well, maybe just spend £10 of your 30 or 100,000 of your 300 and keep the rest to do some other projects, because you could come in and fill that gap that our private investment would leave behind.
Precisely.
And so in terms of the alternatives that people have at the moment is to either raise private funds or use their own money. What would the advantage be over raising, say, private investment and using a mezzanine product from someone like Novi?
There are many advantages. Let's assume that let's assume you have the money. You have 300,000 to put in one project. Now, a project is cyclical. It could take 9 to 12 months, which means in that period of time, you're not able to do anything else but that one project. So by getting in a mezzanine provider, you can engage yourself in maybe two projects at the same time, thus increasing your equity IRR. Mathematically as well, mezzanine helps improve your equity return, just like debt helps you improve your equity return, because uh, mezzanine is cheaper than equity and debt is cheaper than mezzanine. So, for example, if your debt is coming at 7% and your entire project return is 20% and your mezzanine sits at 15%, the amount of money you make on your equity would be significantly higher if you get a layer of mezzanine.
Interesting. And I guess the thing I was thinking of as well is that there are a lot of people that enter small scale development, or indeed out there listening and thinking about entering it, and maybe think they don't have enough money, and maybe understand the principle of going out and finding high net worth individuals and borrowing private investment, but aren't comfortable with borrowing high net worth individual private money. This is a business to business arrangement, isn't it?
It is, and fundraising is a very time consuming uh, effort. It's not like you made a couple of calls and they've got your checks ready. Typically, fundraising for newcomers or even for established players could take 3 to 6 months. You've got to make tens or hundreds of calls to see who's got the money at what point in time and go through the due diligence with each one of them before, say, 5 or 10 of them say yes to you. And I've come across developers who are using private finance. They raise tickets like 10,000 or 25,000 a piece. Now imagine if you had to fill up 100,000 gap and you're looking for 10 investors to put up 10K each. You're talking to 100 people to get those 10 people. And that's a lot of time and effort, which can be saved if you just came to one player who would say a yes or no within 24 hours.
Yeah, I like that. So what we've got to do here is not only we got to look at the cost of this mezzanine finance, the interest rate, but actually compare it to the cost of our time and our effort to get the project going. And you're right, absolutely right. The work to build rapport with potential private investors takes some doing. And even those ones that are interested might not have their capital available because it might be deployed and they've got to wait for it to come back. And that timing doesn't often work. And so that can be a challenge. So what we're saying here, one relationship, one call with a company like Novi could fill that gap fairly quickly.
Precisely. Fundraising is every entrepreneur's most time consuming part of their routine. And that's what we are trying to address here.
Yeah. And is there any sort of particular criteria here that people have got to get this money compared to private money? What's the hoops we've got to jump through? Because it sounds like it's a great opportunity. As entrepreneurs, we don't want to spend time running around tracing all this money. So it sounds great, but what are the hoops we've got to jump through?
Richie, I'm a products guy, and in all fairness, we don't have one product because I believe that it's no one size fits all situation. We're still in the early stages. We've done a couple of deals. We want to work with more developers and I'm sure it's going to be at least 20, 30 more deals before we get to a product which we can advertise. Right now, it is one-on-one. We try and understand what the requirements are and how the project is going to shape up and make a decision. But maybe a year down the line, once we've done 40 to 50 deals, we would have a framework which we would publish on the website. Unfortunately, that's not the case right now. But in terms of the overall framework, as I said, we're looking to sit between the senior lender and the developer's equity. So if you're developing something worth 500K, you've got a senior lender's term sheet for 350, and you're looking to get a part of that 150, which you're either short of or you just want to do more than one project at the time, that would be the right time for us to get involved.
But in terms of the criteria of the project and the experience of the individual, do you rule out new developers, or have they got
Not at all. Not at all. We're not ruling out anyone. As I said, one of our key criteria is that you have a senior lender's term sheet. So that is what we are piggybacking right now on. If you've got someone to lend you 70% of your project, then we are happy to base ourselves on that underwriting and help you in filling the gap.
So you're getting the confidence of that senior lender, presumably that we're going to proviso that I guess that's a reputable senior lender that maybe you've heard of. They will have done all their underwriting. They would have ticked the boxes and said, yes, here's our offer, our term sheet, as you say, that we're prepared to lend on. That gives Novi the confidence that you can put a mezzanine layer in there.
You're absolutely right. Because the senior lender would have done their due diligence on the project, on the LTGDV, on the risk side of things, on potential exit scenarios and all of that. So we would essentially base our decision on the senior lender's underwriting. Of course, we do have some internal tick boxes, but those are not very scary at all.
And in terms of the senior lender, do they have to approve that there's a mezzanine funder coming in to the deal?
Usually not. Usually not. Senior lenders are they're just concerned with their part of the money and the first charge. And I've worked with senior lenders for over 2 decades now. So unless and until you've got a blacklisted shareholder or a blacklisted director, the senior lender is not concerned where the rest of the money is coming from. They're just concerned with the source of funds.
So the anti-money laundering, all of that stuff, they know where the funds come from. So you will sit as a mezzanine funder as a second charge behind the first senior lender, and behind that becomes the developer with their own equity. Is that correct?
That's right. That's right. So if things were to go south, the first charge the first people to be paid would be the senior lender, then us, and then whatever is remaining goes to the developer.
And so you're taking more risk than the senior lender and less than the developer. So I guess in that middle spot that you're in, as you say, the mezzanine, and I love that description for property people. It's so simple to think about: the ground and the first floor, and it's a level in between. Your typical interest rates that you might charge on that mezzanine finance, do you have an idea of what we could share in terms of today's numbers?
Well, typically a mezzanine would cost you at least 400 basis points above the senior lending cost, because the risk is higher, as you said, but the risk is lower than the equity developer, so our return would be lower than the developer.
So we're in there with a not unreasonable increase over the interest rates that the senior lender gets, and that's where I think I mean, a lot of people might look at that and go, "Oh, I could get private investors for a lesser rate. Okay, maybe I could get them down at a similar level to the senior lender." But of course, you quite rightly pointed out that work involved to go and get those lenders is quite important. I mean, it's interesting. I'll just share a story just that I had just yesterday. Funny, actually, in terms of when we recorded this, and actually, there was a student of mine who has just secured a project and literally had a private investor who was going to put in $750,000 to this purchase, which is about 1.5, has pulled out for completely unrelated reasons with his accountant, and has pulled out. So he said this student's now left trying to fill this 750,000 gap and trying to re-engage with his private investor, high net worth individuals that he knows to resurrect that money. We're saying here, actually, that if we're in a business to business arrangement, because this is an emotional pullout, an accountant, I think, has spooked the individual about investing in this particular project, where this is a business to business arrangement, this is less likely, once this is committed, to fall apart, isn't it?
You're absolutely right. I mean, we do this for a living. That's what we do. So once we've given a term sheet, we know that we're going to be in the deal.
Yeah, and you understand it. Whereas I think one of the problems, which is not insurmountable, but it is a problem in this particular example I've just given, is that a lot of high net worth private individuals who don't understand the property business and could just hear something that the government announces and spook them. Whereas you've been in this industry a long time, yeah, things could spook you, but actually you've got plenty of knowledge to know that, right, if we're going to invest, we make that commitment, we're going to do it.
Yeah, I mean, it's the same as in capital markets. When you see the retail versus the institutional behavior, it's the same behavior across all industries. And just to comment on in terms of the cost of capital, private investors matching senior lending cost of capital is not really prevalent if the ticket sizes are pretty big. I do see some investors investing in coupons at 10% or 12%. But if you generally see the preference share or the mezzanine market in the West, including UK, Europe, and the US, currently mezzanine rates are between 18 and 24% for some of the largest developments. When I used to work for one of NYC's biggest project, and the mezzanine rate there was 16%, and that was a $3 billion project, whereas JP Morgan's senior lending rate was 12%. So you would always find a 400 to 600 bips difference between senior lending and mezzanine finance. If the investor is sophisticated enough, no one would be foolish enough to lend at senior lending rates and take a higher risk.
Yeah, so I guess that is, you said it. It depends how sophisticated they are. Okay, if I can say that properly, because I guess that's on the scale of your project. So we're talking about private investors putting, as you talked about earlier, 10 private investors putting in 10,000. They're not going to be sophisticated investors and would accept maybe a 10 or 11% as we talk today.
Yeah,
but $750,000, much more sophisticated investor, almost certainly, is likely to demand a higher rate because they know that's what they could get elsewhere.
You're absolutely right there.
Interesting. And when you talked about products, I like the fact that you're going to develop it into a product. I love the fact that we're talking very early on in your journey, because it gives people out there a great opportunity to connect up with you. And by the way, folks, we give you some contact details for Novi before the end of the show. So make sure you've got a pen and paper to write those down. But I think getting into products is great. When you talk about products, we talk about plural. Where do you see the sort of variation in these products coming from what you've learned to date?
Well, I think the products have to be very different depending on the geographies and the size of the projects. Because I've been looking at multiple deals over the past 3 months, and the margins, for example, are very different in the north versus south. And so are the risks, the sales risks associated with it. So when we are looking at potential exits, when we are looking at refinancing options, and when we are simply looking at sales volumes, I would say the risks are very, very different. So I guess we're going to end up with 3 to 4 different products to cater to different sizes of projects as well as locations.
Yeah, interesting. Yeah, that makes sense. And in terms of the minimum size project that you might get involved with mezzanine, because I think that's quite useful. A lot of small scale developers will start out very small. Is there a minimum sort of lending level in terms of this capital stack that you'd want to get involved with to make it worth your while?
There is no minimum. At the moment, we are keeping our maximum exposure to about £100,000 for the first transaction with a developer, which essentially means that they could be doing anything up to £1 million and have a senior lending of, say, £700 sorted. So we can come up with £100,000 to help them there. But as we develop confidence with the partner, going forward, we can increase our exposure.
Interesting. So actually, that's a relatively good entry level for small scale developers. And what you want to do is build that relationship with them early on and see how that pans out as you develop your product, your model as well. And presumably on the second deal, third deal, you might look to enhance that lending.
Absolutely. I think it's a together we grow model. We are in our early stages of finding the right product, and the developers are in an early stage of getting into the development business. So it's a beautiful fit there.
And in terms of confidence for people, a lot of people need that confidence that if the money's pledged, in a term sheet, the money's going to come. There's an obvious question, so we ought to ask it. This is a fairly new part of your business. How do people have the confidence if you say, yeah, I'm going to lend you 100,000 or 200,000, whatever that might be, you're going to come up with the goods?
Well, if the offer is already accepted and we issue a term sheet, we are happy to put the money in escrow or in the solicitor's account within the next 48 hours.
Right. So you're that confident. So you're only going to offer on the basis that you've got that funding in place to do this, and that funding can be, as you say, placed in escrow. It can be there. It can be ring fenced. It's ready to go for your projects. That confidence is there.
Yeah, absolutely. When we are committing, we don't need time to then go out and get the funds. We are committing on the basis of the funds which are already there with us. So it's not like a crowdfunding situation where we agree to fund and then we go around asking people for money. That's not the case here.
Yeah, that's what I was hoping to get to, was that people are confident that this is a different model, that you've got that. Tell me a bit about Novi overall, and what else does Novi do? Because I think that helps people with their confidence. This is a new product. People don't want to be guinea pigs in a company, but they're not in the company because the company does other stuff.
Yeah, so if you see Novi.com, our primary product is the fractional ownership product, and we operate a student housing entity in Coventry. We currently operate about 65 odd rooms there, and we are scaling up to 100 by the end of next quarter. So that's an established business already. And as I said, we do foreign national loans. So we help people from Asia, Middle East, who are buying properties in the UK. We help them with financing there. Again, that's a back-to-back lending arrangement, but we've done decent volumes over there. So currently, we've got over £11 million of asset under management, including both discretionary and non-discretionary.
Wow. So we're nicely established. We've got a good track record. Tell me a bit about your background as well, Ashish, because I'm sure people will be interested to know, how have you got to this point? Tell me about what you've done in the past.
Well, predominantly, I've been into structured finance and private credit. But if you look at the last 20 years, I've done investment banking, securities, commodities, all sorts of things. But most of my time has been in real estate finance, either on the structured side or on the private lending side.
Yeah.
So I do a lot of asset-backed securitization as well. So what we do is we aggregate loans and we sell it to bigger banks or bigger investors.
Wow. So a good broad spectrum of understanding of the marketplace we're in here as small scale developers. Tell me about the process then. So at the moment, early days, you want to productize it. You want to get to a point where the application process, I guess, is then automated to an extent. What would be the process and timescale now if someone's listening to this and go, yeah, I could do with some funding. That sounds perfect for me. How does the process work?
Well, right now it is, as I said, it's not a formal process. Just look me up on LinkedIn or send me an email. If you've got an offer accepted or a potential deal, discuss it with me. I'm happy to get on a video call and run the numbers with you. And if you think that your senior financing is in place, you've got the planning permission of the deal in place, you've got the numbers stacked up with the RICS valuation, we'll simply discuss what's the funding requirement and give you a decision in the next 24 to 48 hours.
So a very hands-on approach at the moment. Obviously, why you need to get it productized later on, but we actually get to speak to you, and we can get an answer relatively quickly to know whether this is a goer or not a goer for us.
Yeah, absolutely. I mean, for this product right now, I am the single point A to Z. I'm the underwriter, I'm the peon, I'm the cleaner, I'm the financier, and I'm signing the check. So
So you're
until
the
we
cleaner
get,
as well. So if we've got a development that needs a bit of sweeping up at the end, you're happy to come and do that.
absolutely.
Well, look, you've said it here. This is recorded, so people are going to take you up on that. And in in terms of planning, you talked about planning. Obviously, a lot of small scale developers are looking at permitted development rights for the obvious reasons, but they're not going to have those permitted development rights in place when they purchase the deal. Do you guys have a sufficient understanding of permitted development rights to know the certainty, obviously, presumably with a letter from the developer's planning consultant, that it will come, or do you need to see that permitted development right certification?
No, we do have some capabilities, and as I said, we're basically piggybacking on the senior lending underwriting as well. So if a senior lender has underwritten that deal for 70% without the planning consent or with a pre-app, we're happy to jump in as well.
Excellent, excellent. And I'm just going to go back to that loan size, okay? Because there's definitely going to be slightly more advanced developers who go, I love this, okay? Because I think I can think of my portfolio of students that I have, and there is definitely some that are really good at the private investment negotiation. They've got some great investors working with them. There's others who I know will be listening to this today who will totally love this opportunity not to have to wine and dine and negotiate these 100 private investors to get down to the ones that are there and ready, but would be limited by that £100,000 investment. So if I've got someone listening to this and they go, well, actually, no, I'd be looking for at least 200 to 300, but it's a really good deal, and they've got a fair bit of equity. Is it worth them calling you at this stage, or is it we're looking at 100 to get the relationship going?
Well, I think 100 is the number we have in mind. Maybe we can go up to 150. At best, 200 if the project is very good, but not beyond that. The key here is to develop the relationship and the product and test the waters and see how it goes, and then we scale up from there. So we want to diversify our risk across 50 deals over the next 12 to 24 months. Yep. And see how that pans out. And we don't want to put a lot of money in a single deal. We want to put, say, between 50 and 150 or 50 and 200 across 50 deals, see how that 10, 20 million pounds performs for us, yep, and then take it from there.
What if it's 201,000? No, don't worry. No, that's good. I think it's good to know where you're at and where your business model's at. And I think if you're listening and you like the sound of that relationship, because I think it is a relationship that you could build, and as you can see, Ashish here and Novi want to expand what they're doing. You maybe think about another project. You think, well, maybe I wouldn't have done that one, but I'll do that one, and I'll get Novi to put the money into that one, and I'll build that relationship. And maybe in 12 months' time, when I've done that, they're up for sticking $500,000 or something. Particularly because we built that relationship. I think that's great. Well, how can people contact you? How can people reach out to you personally, and to Novi? I think you mentioned the website. Could you just give some contact details out again?
Yeah, my email is fairly simple. It's a@novi.com. And you can look me up on LinkedIn. You can go to our website. You can book a meeting from the homepage itself.
Oh, so even on the website, we can literally book a meeting with you?
Yes, you can.
Great stuff. So reach out, LinkedIn. The email address is as simple as it gets, isn't it? a@novyy.com. That's well, you can't get simpler than that, can you? What happens if you get another person with an A name in there? They're going to have to be A something else, aren't they? Because you've commandeered the A one.
Yeah, I'll remain at A. Maybe they'll become A squared or A cubed.
Yeah, if they behave themselves. I love it. Look, write that down. Novyy.com. Okay, a@novyy.com, an email address, and pop on the website, have a good look around. And what I would say, if you've got something of interest, don't waste Ashish's time just to ring up and have a chin wag. But if you seriously got something and you think this could be a relationship that could be interesting to you, then reach out and book a call to have a chat. Definitely connect up on LinkedIn, because you're going to see how this product develops. Ashish, I think that's terrific. Thank you for coming in. Hopefully that's been useful. And I'm absolutely certain some people are going to are going to reach out to you at some point. And I think what we might try and do is find an appropriate time to actually get you into our developers club to talk to some of our actual students, because I think a lot of them, the level you're talking about, would be a terrific interest. So you up for that in the future, coming up to Birmingham to our developers club?
Absolutely. And thanks for having me here. More than happy to come to Birmingham. Would love to help as many as I can as we develop the product and get to a framework in the next few quarters.
Great stuff. But as long as I am going to forewarn my students that you are prepared to do the sweeping up labouring of any project that they have. You said it. Ashish Saraff, thanks for coming in. I love what you're doing there at Novi. Appreciate your time today, and we look forward to seeing you again soon. Good stuff.
Thank you.
Thank you, my friend. Thank you. Hey, how good was that? I mean, what are you thinking? If you're out there, you're thinking, and I bet a lot of you are thinking, wow, I'm spending so much time with private investors and I don't even like doing that. As you said, you could talk to 100 to get down to 10. It is a funnel, isn't it? And imagine if you've got this position where, I've got a bit of equity, or I might even have a couple of private investors, but actually getting this mezzanine funding in. And don't think of those headline rates. Okay. Think of the work and the effort that you've got to put in, because time is money with all of this. It could really work well. It's definitely early days. Okay. But follow Novi, definitely reach out, connect up with Ashish on LinkedIn, follow what Novi are doing on Novi.com. I think you might find this is a very interesting product, a very interesting company that I think is going to go serious places. Hopefully you've enjoyed today's show. If you do, like, subscribe, because let you know then when anything else is coming out, what other interviews. If you're interested in development and you haven't dipped your toe in the water, there's a bit of free training you might be interested in. Write this down: propertyceo.co.uk/SFR. propertyceo.co.uk/SFR, and that stands for 6-figure roadmap. Okay, a bit of free training I've recorded which shows you what small scale development's about, because maybe you've turned up here and you're thinking, what on earth is small scale property development? How could I actually get started? Well, that bit of free training will help you do that. Hopefully you've enjoyed it, and I look forward to speaking to you again soon. Cheers now. Bye-bye.